The day modestly lower today. Technology, consumer-related shares among the biggest drags on the S&P 500, which is down for a second session in a row, but it is still up 27% since the beginning of September. Worries about the market's ability to extend the recent gains have increased, though, given the expected end to the Federal Reserve stimulus program next month. How do you protect your portfolio, and what is ahead? We're joined right now by Wall Street veteran George Ball. He's Sanders Morris Harris Group chairman, along with Scott Kavanaugh, First Foundation president and CEO. Gentlemen, nice to have you on the program. Welcome.
Hi, Maria.
Hi there.
Thank you, Maria.
Thanks for joining us. George, have you ever seen a market like this one?
It's a very unusual market, Maria. It's going up, and yet people are scared to death. They want to be in, but they're afraid that maybe they should be out. And so everyone's looking for a hedge for the right defensive play, for the right offensive play, and it's a very convoluted marketplace.
Right, for sure, but you've got to be putting money to work in various areas and have to operate your business regardless. So, Scott, how are you allocating money right now, and what's most important in terms of all of these mixed signals that we're seeing in the market?
Well, we believe that you should stay very diversified, and as such, we're in several different categories. Currently, we're in emerging debt. We're in municipal bonds, high-grade essential service municipal bonds, and also large cap value stocks, which we still believe have a lot of value.
George, what about you? Where's the value in this market?
The value in the market today, Maria, is paradoxically probably in the big universal bank stocks. They've been reviled, they've been beaten over the head, they've underperformed, but counterintuitively in this phase of an economic recovery, really the second phase, bank earnings tend to rise quite rapidly, which is a plus. Also, there's increasing talk that the one bit of financial reform that may actually take place would be the breaking up of the big banks, either by some form of modern-day Glass-Steagallization or by capital requirements that cause them to break into their pieces. If that happened, the banks are worth a great deal more in bits and pieces than they are as a whole in the marketplace today. So whether you look at earnings or whether you look at the possibility of a breakup, banks may have less downside and more upside than almost any other sector, and that for the first time in a long time, by the way.
Yeah, I mean, I guess the regulatory environment has put handcuffs on investors in some areas, because they're thinking, we don't really know what the financials business is going to look like, given the fact that some of the rules are still being written as we speak.
And it's that confusion that tends to build opportunity. What do they say? Good investments are clearest in the rearview mirror.
Right.
And right now, the banks have pieces that are worth a lot of money if they're individual, and if not, the earnings tide is working for the banks in a very powerful way.
Scott,
Maria,
yeah,
I might add that with the Dodd-Frank bill, there's some 270 regulations. And I sat with the regulators, both at the OCC and the Federal Reserve Bank, and quite a few of those don't even fully understand what the regs are and what the implications are for banks.
Right. So there you go. That sort of makes my point. Today is the deadline for the debt ceiling. Are either of you worried about some of these other catalysts, like the extending the debt ceiling, like the QE2 program going away in June?
Maria, I think there's one very clear factor that the ability of politicians to disappoint is almost infinite.
Right.
And where I think the marketplace thought that politicians get together, we'll have a bipartisan accord on the various spending cuts, tax expenditure reductions, et cetera, needed to balance the debt crisis. It's not happening soon, and that could psychologically create a major impediment, a glitch in the marketplace.
Sure.
We need to move forward on that front.
Makes a lot of sense. Gentlemen, thank you very much for joining us. We appreciate your time today, and we'll see you soon.
Thank you.
Up next, he's been very bearish on the U.S. dollar, but has the greenback's recent rebound changed the outlook of Sam Zell? We will find out in an exclusive interview, find out where Mr. Zell is allocating money around the world. Later, is a real estate bubble burst on the horizon for China? We'll talk with co-founder and CEO Soho China. She'll weigh in on what's happening in terms of development in Beijing and Shanghai. You're watching CNBC, First in Business Worldwide.